Welcome to Getting Rich with Rich. I'm Rich, founder of Under the Radar Report. Wow, what a reporting season. Let me say one sentence. Good things happen to cheap stocks. It's worth remembering because good things happen when you buy cheap, and that's the big takeout this reporting season. And it really does validate what we do here at Under the Radar Report. We're into picking stocks and we don't pay up. That's the key to making money. Stock picking is very much, on the agenda and has been proving to be a real wealth generator this reporting season. I want to go 3 stocks that are, the highlight for us, or some of the highlights for us. There's been so many, but I'm just going to pick 3 of them. That's right. I'm doing a buy, hold, sell. So it's pretty exciting. But before I get onto that, I want to just say something about reporting season in general, and that is that, just underlining just how much of a stock picking world it's been. Like, look at the big caps, look at CBA. As I mentioned the other week, it really got bought up quite aggressively. It got sold off a bit, but the buying stepped back in. Look at that in contrast with NAB. NAB really did get hit hard. They got punished. It's not just a matter of just buying the sector, buying an ETF. You really need to be sorting through which stocks are good value, which stocks can grow. There's a lot more differentiation even at the big end. Then, we come to the retailers. Look at Woolworths. Didn't that get hit hard? In contrast, Coles got bought up. There really is a lot of difference between the winners and losers in this reporting period. And you might be on the right side of the moves, but even if you're not, you've got to remember one thing. Investing is about the long term. Investing is about realizing what part you want each stock to play in your portfolio and just reassessing that constantly. Constantly iterating where you want your portfolio to be positioned in the context of what you want out of it. That's why, we're the best judges of our own risk. We're the best at deciding how much risk we want to take. And that's why, we do the core growth kind of differentiation between stocks. And that's what you should look at when you go to our website. That's been a new innovation, that we're really pushing hard. So let's look at the buy, sell, hold. Like on the buy front, I cannot go past Hansen Technologies. This is a quality company. They do billing software for utilities. There's big tailwinds because, utilities, especially at all levels, telcos, water, energy utilities, they don't want to be billing people. They don't want this kind of activity on their books. They want to be outsourcing it. Where do they outsource it? Well, Hansen, but also Gentrack. Hansen has a more stable customer base because they're at the bigger end of town. But what we saw is, the Power Cloud option is really coming into its own. That's the software, that's the cloud-based sort of solution that they've got, which is in line with Gentrack. So this is coming into its own, but on the same way, their core business wasn't quite up to speed and the market really sold it off aggressively. Now there's some cash flow issues, but with what we're seeing on the cash flow front, the sell-off provides a huge opportunity to buy back into a quality stock. So read our research. So that one's fascinating. On the hold front, I cannot go past the stock that Hansen replaced. This stock, it's not big, but it's been shooting the lights out. XRF Scientific. They basically do minerals testing. So they're a specialist in that area. For a long time, they just stagnated. No one was interested in the stock. We don't always got our timing right, but boy, did we get it right with this one. It's more than doubled in 12 months. And the stars have aligned for a lot of contractors, but no more than this contractor. Why is it doing so well? Well, I can never emphasize this enough. IP is a key strength that you need to have in small caps because you need to rely, on the big customers of this world. XRF has a fantastic customer base, but you need them to have confidence that you've got IP that they need. So, the stock still isn't that big. Its market cap is less than 300 million. It's got global ambitions, so it's still running. and we're holding on. We're holding on for the ride. But like now for the probably the biggest highlight of the reporting season, like often small caps hit it out of the park, but this one really excelled at hitting out of the park. Energy One. So this one spiked 60% on the result. Like that's a huge spike even for this kind of market where we've seen big swings and roundabouts. But this company is at the epicenter of the energy transition. So basically their software trades throughout Europe, but their dominant market's still Australia. Australia is a real growth market for them, even though, there's tremendous potential in Europe. There's 250 generators in Australia. That's up from 150, in 2018. So that's a big growth in itself. If it were a generator, Energy One would be the fourth largest in the national energy market. So it's really got some robust sort of business in the domestic front, and it's going for growth in Europe. So it's exciting, but we've more than doubled our money in such a short time. And as my papa always said, you cannot go broke taking a profit. So it's important to note that we're not selling our entire holding. What we're doing is taking our costs out and letting our profits run. That's the discipline. Like when you're a member at Under the Radar Report, we have lots of disciplines in terms of investing. This is one of them because investing is about following your emotions, sure, but also exercising discipline so you can have some checks and balances on, when your emotions are running high. It's very important to remember what you're trying to do, what, the best risk is for you. So next week, we've got another 2 more reports like blue chips and small caps. There's loads of stocks coming our members' way. It's so exciting. And, these include some that they've specifically asked us about. That's what we do. People ask us about stocks and we include them for our, membership base. So it's great being under the radar and I look forward to talking to you soon.